Hello, this is Dan Terrence, and welcome to Embrace the Journey. Of course, I haven't done a video in 9 months, so if you miss me, I'm still here. I have retired from Franklin Energy since then, last August, and really got into investing and researching clean energy companies that are going public through an activity called SPAC, which is a special purpose acquisition company, and it has been really interesting. I've really enjoyed it. I've started a clean energy SPAC portfolio that I trade on public.com, which means it is open and public to anyone to look at that portfolio and the performance. I do have a monthly email I distribute out to the group on the clean energy SPACs, the portfolio performance, comparison to benchmarks, and then on Twitter I'm active in there daily talking about various clean energy SPACs and other things like that. So today's video is really kind of more of an introduction to clean energy SPACs in the portfolio. And then from here, I think I can go into more detailed topics and work through those as well, and be interested in any ideas you have on what you'd like to be covered. I'm enjoying this journey of learning about how SPACs work and how to invest and make money that way. But I want to share what I'm learning because it feels like I shouldn't just keep it to myself. I should share it to the world. So welcome. I'll try to do this in about 20 minutes or so. My first version was 35, so I gotta talk fast. All right, so clean energy. So what is a SPAC? Again, a special purpose acquisition company. Basically, what a team of investors get together and they raise money through their SPAC and they bring it and do IPO. So it becomes a publicly traded company. The thing is, it has no operations, it has no assets, and the only thing in its business plan is to go out and find a stock or a company that it can then acquire, or what they call de-SPACing. It's really a reverse merger, and that company that they targeted and acquired then becomes the public company traded on the market. So it's really an interesting process. One of the about a year ago or so, October of 2019, Virgin Galactic went, so a year and a half ago, Virgin Galactic went public through a SPAC. Chamath here is one of kind of the SPAC kings. His SPACs trade as IPOA, which was what Virgin Galactic. IPOB was Open Door Technologies. IPOC was Clover Health. IPOD is they're still searching. IPOE was SoFi. IPOF is searching, and he has reserved up to IPOZ. Anything after F is not available yet. But it's an interesting thing. So a couple bullet points here I'll point out in this story. I think it was interesting. This company, a SPAC, is created solely to merge or acquire another business and take it public. Why would another company want to go public in this way? Well, it's a lot easier than going through the whole IPO process. Quicker, faster, less expensive, and they can focus on their operations. The other thing that's really interesting is, well, let me hold that thought for a minute. Investors here, the second bullet point, essentially, they're raising money. This investment team is raising money to go out and find a target. And they're generally given about 2 years to find a target and bring that company public. So if you put, they all come out at $10 is the value. There's a couple that are 20 or 25, but $10 is the normal. And it is quicker, the sooner you can get into a SPAC, closer to that $10, your risk is almost zero, because they will pay you $10 plus interest if they fail to find a target. So it can be a pretty riskless way to get involved, but you could hold on to that for 2 years, right, before something happens. What really I think is interesting, and the best part of this, is that these are companies that historically go through IPO process, and they would probably do other private fundraising, and the private equity and the accredited investors would be the ones getting all the appreciation during that private time, rather than, and then they go public, like we saw DoorDash, Snowflake, Airbnb all came public recently, and a lot of the potential appreciation perhaps has been already baked in, and the private investors have gotten the benefit of that growth early on. Now companies are going public more quickly, allowing for individual investors, you and I, to benefit in that still high growth period for these young, exciting companies. And so that's what's kind of drawing me to this. In my job, I really liked looking at other companies. We did 4 acquisitions ourselves and enjoyed that whole process of finding companies. We had searched over 300 companies, and to get to the 4. And that whole process was just really interesting, and I enjoyed that part of the job. And so here I'm kind of investing in those who are doing that, and it feels kind of like I'm part of the process. So it's enjoyable. I like spending time on it, and just want to share what I'm learning. All right, so a quick timeline here. Again, this 24 months, and this should be, say, months, not weeks. Is that they do the formation of the SPAC, and they go through the IPO process to make it easier, to get the hard part out of the way and make it easier for the company that they find. They go out and they search their target. Again, this could be up to about 19 months worth. They get into negotiations, they get to an agreement, and then there's a definitive agreement, a DA, if you see that term, is issued, and a press release out there that this is our target. And then they schedule an investor meeting. The shareholders get a vote, and if it's approved, then it goes into closing and becoming a public company. If they don't find a target, it goes back, and the investors get their money back with interest. If the investors vote no against their target, they just kind of start over if there's still time left in their 24-month time frame. An example of this is Switchback. Switchback is a SPAC that found ChargePoint as their target. So you can go to the Switchback company website, and they have who they're targeting. Oh yes, come on. And so you can see who they are. It says what we intend to focus our search for a target business in the energy industry. And then the page I was on before, which was the team, you can look at all the team members, see their backgrounds. They bring in these other directors, usually expertise in their target area. So a lot of people here have worked at utilities or different energy companies, and that was their total focus. And then when they found the target, had a definitive business combination agreement, which happened on September 24th of 2020. They issued this press release: ChargePoint to become a public company, advancing EV charging networks reach across North America and Europe. And they then have the shareholder vote is set for February 11th. That's a pretty long time between September announcement and February vote. Most of those are quicker than that. But so right now, ChargePoint is still in this time frame where they haven't been approved by the shareholders, but that would take place here in a couple weeks. What do I mean by clean energy? I found this chart of a lot of different companies, and they bring in like a dash or an asterisk are SPAC related companies. So we got the electric vehicles, which is really hot right now. And you can see a bunch of them right here are in the SPAC area. The clean energy portfolio has all of these companies in that portfolio, and that's performing well. We've got the charging. Here we have ChargePoint, EV Box. There's batteries like QuantumScape and Romeo. Natural resources like the lithium battery materials, MP materials was a SPAC. Lidar, which is used, Lidar systems are used for self-driving vehicles. Luminar was a big one in our portfolio that performed very well. Others are in the announcement stage here. You have energy storage like STEM is in our portfolio and did really well. Solar, you can see there's not that many SPACs in the solar space, but there's one down here, Solar Max, that's been announced. We have fuel cells, and now SPACs are becoming, SPACs and clean energy are such high targets that they've created ETFs, which is another way to play this. Okay, I want to go through a couple trends that which has got me excited, still excited, even though the returns in 2020 were astronomical, were huge. There's still some big trends that I think we're not done yet with this potential bubble, if I'm being honest here. Well, I'm always honest. I guess that's just a throwaway line. Okay, here is the money supply. So Janet Yellen is going to keep the machines running over there, and the Fed is just going to be cranking up more money. You can see that if you just go back only a year, we're about $14 trillion in the money supply. We're now at $19 trillion. That is better than 1/3 growth. That means more than 25% of the total money supply today has been created in the last 12 months. Let that sink in. Holy cow. This goes back a long ways. So that money has to go somewhere, and it is finding its way into the stock market. However, the trend in the number of available shares and companies to invest in is decreasing. There's a lot of companies who are buying back their own shares, and there's just fewer companies. Go back to the late 1990s, and you have over 7,000 companies. By 2015, you're at half of that. In the last 5 years, I don't think there's been any growth in the number of companies. It could have even shrunk more until really in the last 6 months with the fair number of IPOs and SPACs that have come public. There's been a couple hundred companies added in 2020. But fewer companies to invest in, more money. And the other thing that drives the clean energy part is the sustainable investing. A lot of money is going into impact investing, sustainable investing, ESG investing, whatever the term is. It's been used in ESG, stands for environmental, societal, and governance. Public companies have to complete an ESG survey, and they get scored. And those who score high attract this kind of money. Those who don't get at least a B or BB rating end up not attracting this money. So there are even fewer number of companies that score well enough here to take advantage of. If you just go back to, let's see, 2012 here, 4 trillion. We're now at 17 trillion. It's better than 4x in less than a decade. And this is, you can see this is a, hockey stick. This is continuing to go. So there needs to be more companies. There needs to be more clean energy, ESG friendly, sustainability friendly companies for this money to be invested in. And that's why we're seeing the crazy type prices and returns, and this is not done yet. There is a lot here, and we're excited about one more kind of trend, because so much of this is around electric vehicles. The automotive market is huge, and we're seeing a real big impact. Electric vehicles, you can see about 500,000 vehicles were forecasted for 2020. I don't know what the final number was. I think it's probably in that ballpark. You would know vehicle sales were hurt for a while during 2020 with COVID. And you go out to 2028, and it's about 6 times that, so a 6x growth. But there's better news in that they are reforecasting, and we are likely to hit this kind of number 2-3 years earlier, and going out to 2028, we could see twice what that is, twice this forecast. And this is just U.S. Europe and China are way ahead of us in adoption for EV. So you're looking at 10-20x in the next 5 to 10 years. You can see why there's a lot of money chasing this, a lot of companies doing really interesting future thinking work, and that's where our wheelhouse is, and that's why we're chasing this. All right, let's take a look at a couple charts, because charts show price and can see what the reaction is during certain parts of a journey, I guess, for a company. So this is Fisker. This was my first investment in SPACs. Fisker is an electric vehicle manufacturer. They're not a manufacturer. I guess we call them maker. They outsource the manufacturing, or will. Their first car will not be out till late this year or next. When the SPAC announced that they were going to acquire Fisker, you can see what happened right here. It went from about $10.50 to $22, so better than double in about 3 days. It came off those highs. I got in right here in September at $13.30. I came back up to about 18, went down underneath $10. I bought more at $9, and then it started trading as FSR, as Fisker, on October 30th, and you had about 172% gain to the top of the range here at 23.63. And now you can see it's back down to 15. The importance of taking some profits. So along the way, took profits here at about 16.25. Again here, just over $20. And I'm keeping the rest of it for a longer term because I like Fisker, I like the company, but I've sold out about 75% of the shares that I owned. Made good profits, and that's the name of the game. That's what we're trying to do. Get into these early, take profits, and then if we really like the company, hold some of it, which is really just profit dollars, because we've already regained all of our initial capital, for a longer term. And it's fun to watch and be owners of the new economy. Another one, if you want to look at the most extreme example, QuantumScape was a target of Kensington. Bill Gates was an early investor in QuantumScape to make batteries for solid-state batteries for EV. Actually, they don't even make them yet. They probably won't for a couple years, but the technology is being proven out. So it hasn't been proven at scale, but the technology has been proven with some partnerships they have with auto manufacturers. And so when they announced it went from $10 that they're going to target the QuantumScape, to went to 25, so 2.5x. I got in here in the middle of September at 17. Actually drifted back down to 11, and then it came out as QuantumScape, started trading as QuantumScape, and went all the way up to 132.73. It's almost 14x the initial value in about 4 months. Doesn't stay there long, and it's come back. It's trading back at 50. It's still 5x over the original. My profit taking on the way, I took some at 52, which was initial target, 78, and then 121. I also bought back in a little bit more here at 30 when it came off that high, and now I've got my little bag of about 25% of the original investment that I'm holding for the long term. So again, this is another example. I think of the opportunity. This probably is an extreme example. You cannot expect this in most or any future SPAC-related items. Okay, There's two that were just announced, and I'd like to just kind of show you what happens, when they do announce. If I can find, I can find the right one here. So right here, Climate Change Crisis SPAC acquired EVgo last week. And let me take this to a daily chart. So it started trading at 10. It traded there for 6 weeks or so. In the last 2 or 3 weeks, there's been money moving into these kind of clean energy SPACs. So no announcements were made here yet until yesterday, or Friday, 22nd, that's Friday. And it doubled in price, overnight. Well, I guess it went up 70%, but closed at 22, which is more than double the original price of $10. Today we're trading back at 19.80, and I anticipate that this will kind of probably come back to 15, and then go back up as it gets closer to the merger date. Another one was ACTC, which is ArcLight Clean Transition. Their target was announced a little more than a week ago. Proterra, again, started at 10, it drifted up into the 12s, and then announced and went up 106% on that day. It's now coming off those highs pretty substantially, and again, took some profits here on that day of the announcement, and they're now riding with about half of the initial investment into the merger, and then we will probably take some more profits at that time. So this is kind of what we're looking for and what we're doing. Let me go to, hold on one second, our list of, so we have about 50 to 55 names identified. I publicly buy these at public.com, which is a social kind of trading platform where your portfolio is wide open for everyone to see, so you can see exactly what I'm buying and when I buy it. We have the stocks here that have transitioned. There's about a dozen of them, Fisker, QuantumScape, and many others. The next group have announced their targets. There's about 15 of those here, like ChargePoint and STEM, Proterra, etc. And then we've got about another dozen or so here that are in the searching mode. We also have a group down here that we've identified but aren't currently available on public to buy, and they will become. In fact, I kind of check every Monday, and I bought these 4 to add to our portfolio because they became available to trade on public.com. So we'll continue to update these as we go along. We have the reporting that we do. So every month, email is sent out on the portfolio, reporting the additions and announcements and where the portfolio sits from a return. If we look at year to date after 3 weeks, I also kind of track this weekly, and I will tweet the weekly results. Clean energy SPACs are returning 6.2% compared to 2.3% for the S&P, 5.1% for the NASDAQ. The small business indicated by the Russell 2000, about 9.7%, so a little shy of that. And then there's the clean energy ETF, I think is a good benchmark to track against, which is up 23.5% after 3 weeks already. Fairly solar heavy, and there's not a lot of solar in the clean energy SPAC world yet, so I think that is the main difference there. But I have also created a mini portfolio where I really focused in on just 10 of those 50 stocks. 1 that has already transitioned, 2 that had announced, and then 7 that were wide open out searching, and 2 of those have announced, which is why this portfolio jumped up pretty quickly and is up 44% already on the initial investment of $10,000 to $44,442. So that is what we're doing. I intend to do more videos that get into more deeper or individual stocks or individual kind of sectors like EV vehicles or the charging business. If you have any topics you'd like me to talk about, let me know. Otherwise, I will call it here. Went a little bit beyond my 20 minutes, but better than the 35 the first round. All right. Take care. And until next time, peace.